The hidden cost of hesitating on good setups. What if I told you the biggest loss you'll ever take in trading isn't a losing trade? It's the trades you hesitated on. The clean ones, the ones that ran without you. I've watched this destroy accounts for years. Beginners freeze because they're scared. Experienced traders freeze because they overthink. Different reasons, same result. I've traded through multiple market cycles, platform changes, strategy fads, and one pattern never changes. Hesitation quietly drains more money than bad entries ever will. I call it the hesitation tax. And the worst part is, most traders don't even realize they're paying it. Because it doesn't show up as a red number. There's no drawdown alert, no painful stop out. Just silence, followed by regret. You spot a clean setup, clear entry, defined stop, logical target. A proper 3-to-1 trade that fits your rules perfectly. But instead of executing, you pause. One more candle. Let me check another time frame. What if this one fails too? While you're thinking, the market moves. Price runs, and now you're staring at the chart doing the most painful calculation in trading, the one that never mattered because you didn't click. One missed trade doesn't feel fatal. You tell yourself it's fine. You stayed disciplined. You avoided risk. But 5 missed trades in a quarter? 10 over a year? That's not patience. That's a recurring penalty for indecision. Money you could have compounded. Capital that could have changed your position size, your confidence, your timeline. The market doesn't punish hesitation loudly. It charges you quietly. But the real damage isn't financial. It's psychological. Every time a good setup runs without you, something dangerous happens in your brain. You start doubting your own pattern recognition. Was I wrong? Do I actually understand this market? Am I just getting lucky when I win? I've reviewed years of trading journals, not just my own, but of traders who eventually quit. They didn't quit because of losing streaks. Losing streaks force discipline. They quit because of accumulated regret. Hesitation creates mental debt, and eventually traders try to pay that debt back the worst way possible, by forcing trades. You miss the gold, then you chase the garbage. After one missed trade, you start watching price emotionally, leaning forward, feeling pressure to make up for what you didn't do. So the next setup, usually weaker, gets entered faster, late, poorly, without full alignment. That's how hesitation on good setups turns into impulsive trades on bad ones. And when that trade loses, it hurts twice as much. Not because of the loss, but because somewhere in your mind you're thinking, if I had just taken the earlier one, I wouldn't even be here. This is how traders lose emotional balance without ever breaking a rule on paper. Most traders think discipline means avoiding trades, but real discipline is taking the right trades even when you don't feel comfortable. Because hesitation feels safe in the moment. There's no immediate consequence, but psychologically, it destabilizes you. Setups stop feeling obvious. They feel fragile, unreliable. Not because the market changed, but because your relationship with decision-making did. Here's the shift that changed everything for me. Trading isn't about being smarter than the market. It's about recognizing repeating behavior and executing consistently. Hesitation exists because you're trying to predict, not trade. You want certainty. The market only offers probability. Once I accepted that, I stopped negotiating with charts. I don't ask, what if this fails? I ask, did it meet my rules? If condition A, B, and C are present, I execute. No debate, no extra confirmation, no emotional bargaining. At that point, I'm not a thinker, I'm an executor, and that's where hesitation dies. To make this practical, I use a simple system to eliminate hesitation before it sabotages my trading. Everything is defined when the market is closed. If you're deciding in real time, emotions are already in control. Once my rules are met, I give myself a short execution window. Not minutes, not endless thinking. If I hesitate too long, the trade is invalid and I walk away. This doesn't train impulsivity, it trains decisiveness. I also track every trade I didn't take but should have. I log the missed profit. At the end of the month, that number hurts, and that pain rewires behavior faster than motivation ever will. And when fear is high, I don't avoid trading, I reduce size. I trade so small it feels boring, because right now the goal isn't profit, the goal is execution. Confidence comes after action, not before. Earlier this year, I had a clean trend-following setup on gold. Structure aligned, momentum confirmed, entry hit my zone. Old me would have waited for a better price. Instead, I checked my rules, everything lined up, and I executed within 45 seconds. The trade wasn't massive, but it was critical, because the week before I hesitated on a similar setup and it poisoned my mindset for days. This one restored clarity. Action removes doubt. Execution creates confidence. The market is going to give you another clean setup, not eventually, soon. A stop loss is a business expense. Hesitation is a slow bleed. Stop paying the hidden cost. Comment below, what's the one trade you still think about, the one you didn't take? I've spent years trading live markets and learning these lessons the hard way. If you want fewer mistakes and more clarity, subscribe and turn on notifications. I'll see you in the charts.